can I acquire a foreclosure property with your hard money? Well, let's back up and make sure everybody understands what a foreclosure is, because a foreclosure is a process. Okay, a foreclosure process starts with called a notice of default, NOD. Okay, notice of default is where that's going to start. It ends with the sale actually happening. That can be that the bank is the highest bidder and they actually get the property back, or it can be that some other person goes and actually buys it and they become the owner of the property, or better said, they become the owner of the note that's just been foreclosed on this property. You've got to be careful to make sure that's not a second position. So foreclosure is a process. So what you're really saying is, where in this process can I use the money to purchase a property and where can't I? Well, what I like to say, there's this area here that's called pre-foreclosure. Okay, so pre-foreclosure is anything from before, when they are just late on payments, all the way to the time that they are going to actually have a sale on the property. Okay, so somewhere in here they're going to do a notice of sale. Okay, saying, hey, we're going to sell the property. Anytime prior to this sale, when this sale actually happens, we could lend money to do this property based upon a couple of conditions. We've got to be able to get access inside the property. We've got to be able to get full title insurance, full hazard insurance. That's really what we need, because we're gonna need contractor bids, we're gonna need everything else through that. So as long as you can get access to the property, which typically at this point, you're dealing with the owner, you're not dealing with the bank, because the bank doesn't have any say. In some cases, it might be a short sale. That's where you're still dealing with the owner, but it's subject to the bank taking less or shorting what is owed to them. So if the bank's owed $150,000, the bank may need to take $130,000. Well, why would the bank do that? Because they think it'll be cheaper for them to take that than take the property back and resell the property and sit on it and pay taxes and everything else. So that's called a short sale. So a short sale is done by the owner but approved by the bank. But the owner of the property is the one that's actually signing that. So anytime in this process up until the foreclosure sale on the property, as long as we get title insurance, access to the property, and hazard insurance, we can lend on that property. What becomes tricky is at the foreclosure steps. So whether that's in the courthouse or at the foreclosure, remember, you've got two different judicial, non-judicial foreclosure processes. So whatever happens there, eventually a sale is going to transpire. Anybody can go and bid on this. Well, here's the thing. If you go and bid on this, the owner is not obligated to let you get in the property, look at the property, or know what's happening in the property whatsoever. So most of the time, people are buying these properties sight unseen. Now, occasionally, and most of the time, I should say, it's money within 24 hours. So typically you're putting $10,000 down. You're going with a cashier's check for $10,000 made out to yourself that you're going to endorse over to the attorney. And then you have to have the rest of the cash within 24 hours wired to them the next business day. And then you as the owner then have to go and say, who's in the property? If there's somebody in the property, you have to do an eviction, or you have to do a cash for keys, give them money to move out. So you're dealing with those types of things. Now, sometimes you have longer than 24 hours. Sometimes there's 10 days or 14 days. And that's in just a few states. And during that time, there's sometimes a right of rescission where the seller or the owner can come back and pay it off before you can actually take it. So those types of things. However, it still doesn't give you access to the property. And remember, for us to be able to lend, we need access to the property. So we're going to need contractor bids. We're going to need pictures of the interior of the property, full title insurance, full hazard insurance. So as long as we can get those things, yes, we could lend on it. But most of the time, once you've bid on a sale, you can't back out of it. Only way that you get out of it is if the owner of the property ends up getting the money to pay it off during the right of redemption period, which is only in a few states. And if not, then you're responsible for that money. Well, we can't guarantee that money because we haven't been able to vet the property. We aren't sure if we're going to be able to get title insurance and those types of things. So anything up until the actual sale of this property, we would be able to fund that deal as long as we can get into the property. Now, there's another thing that happens. Once the sale actually happens, the highest bidder may be the bank. Okay, so now we're dealing with an REO, real estate owned, or a bank owned property. Now, once it becomes a bank owned property, then you can come back and we can loan on this portion too, because you're actually buying it from the bank. You can get full title insurance, full hazard insurance, and you can get access to the property. So if the bank is the highest bidder and they're bidding on what's owed, it's a credit bid, and they end up being the highest bidder, then they end up with the property. And then they would have to go and do an eviction if somebody's in there, or do a cash for keys. Once that's actually done, then they would list the property for sale, or you can find out about it before they list it for sale. And as long as you can get full title insurance, which typically is the case, and hazard insurance is typically the case in the REO. So basically when it comes to the foreclosure, you're talking about from the time they become late to the time the bank may take back the property. And we can lend for that entire process, other than right here in that courthouse or in the courthouse steps, just in that interim, because you can't get into the property. You've got to have access to the property. We've got to make sure we get full title insurance, which is easily done before that sale or done after that sale if it's taken back by the bank. So can we lend on foreclosures? Yes. The question is, where in the process of foreclosure are they? Because if it's during this portion, that is the most difficult time for us to provide hard money funding, or anybody to provide hard money funding. Anything prior to that or anything after that is much easier. Again, in simple terms, we need title report, full title, full hazard, access to the property. There's other things that we need as well, but those are the big things when it comes to the property itself. In addition to that, it's also important that we need time to close. We're going to need a minimum of 15 business days in order to close on the transaction. So if it's only 24 hours, that's not going to work because we're going to need that full 15 business days at a minimum.